opposite. I will be magnificent. I will be better than I ever been. Yeah, I will amaze me. True to myself, they can't change me.
All right, so welcome to another wonderful episode of Build a Better Business with the Floyds. We're always excited about bringing some great information, some great content to those who are business owners and aspiring business owners. We're super excited about today, so let's go, baby. We got some good stuff today.
We got a lot of good news to share. Well, it depends on who it's for, but I think it's all good news.
Yeah, it's all good news. Yeah. I mean, when you think about it, we're talking to, those business owners out there, and especially those who are interested in starting a business. Yeah. It's just, it's a beautiful thing, right? So we're just super excited. But, I saw something that was so interesting on the way over here, right? So I'm driving in my car, and I see this big old billboard that says, "Make groceries affordable again." I thought that was so funny. So, I mean, and then they had the letters. It was MGAA. Instead of MAGA, it was MGAA. So I just thought that was super funny. But right now, I mean, that's the sentiment right now. Folks are, either happy or they're sad or they're concerned. It's just so many different things that people are feeling right now.
And some people just don't know. So, we want to just pretty much let you know where you stand and what you can do to make your year better, prepare for next year.
Right. I mean, so I would say at the end of the day, we just have to, go with the flow, I guess, and just make the best make the best of every situation. Not to say the situation is good or bad. It just depends on how you feel about it. But, just make the best of it. So what we're going to share with you today, because now we have the presidential election over with, right? Our country has decided we have Mr. or President Donald Trump as our new president, the 47th president. And what we want to talk about today is we just really want to break down a lot of the new tax plans and strategies that's going to be implemented, things that you can look forward to, things that you may not know. We're going to explain that and break that down so you can have great understanding, especially if you're a business owner. You need to know what you're entitled to. So,
yes.
Yeah. So, all right. So the first thing I want to talk about is let's talk about the rate changes. So the tax rate changes that's happening. So right now, actually, let me change that. They're not changing.
Yeah.
That's what's happening. So currently, what our tax rates are, they're at 12%. They range anywhere from 12% up to 35%. So it depends on what your income bracket is, or whatever your income level is, your gross adjusted income level. Then that dictates what your tax bracket is going to be. But in this case, going forward, it's not going to change.
So that's a good thing.
That's a good thing. That's a good thing because I think when I look at it, I'm just like, man, usually what our goal is, what we're working with, our clients, we're trying to help get them down a tax bracket.
Yes.
And not up. So
because the more you make, the more you have to pay.
That's right. So like if you're in the highest tax bracket, which is, in the 35 percentile, what our goal is, we want to help bring you down into, what is it, to 32 or 24, bring you down as low as possible so you don't have to. That's the benefit of having a business.
Now, I'm sorry for my W-2 people. If you don't have a business, you can't take advantage of these strategies.
Yeah, that's true. Yeah, but we try to encourage those, because a lot of times you have folks, you understand, I'm sure. A lot of folks want to have a business. A lot of times, if you're at a point where you go into your job and, this is how I used to feel when I worked a job. I used to literally dread Sunday night and be happy on Friday. You know what I'm saying? That is no way to live, where you're dreading Sunday night because, you got to get up and go to work. But then you're happy on Friday. You really thank God it's Friday because you have the weekend off. And so if you find yourself in that type of cycle, I would say you probably want to start a business. So,
yep.
Yeah.
And then you have some that is making money on the side, but they're not calling it a business.
Yeah.
If you're making money on the side, you have a business.
Yeah, it's true. I mean, I don't care what it is. You walk dogs, you babysit, whatever it is that you do.
Make cakes.
Make cakes. That's a good one, too. You know what? I always tell folks, if folks who cook, out of their home, bake, do things like that. I just think that's amazing because they're using appliances.
Yes.
It's more than just the utilities and, but the appliances that they're using, the refrigerator, the stove.
Yes.
Oh, man, I have fun with those
and then
clients.
growing up, we've taken our kids to so many hairdressers, taking our kids to their house so that they can braid their hair or cut their hair, and they never knew the tax advantages that they was missing out on.
Hey, back in the day. But I mean, hey, home-based businesses is where it's at. At the end of the day, we're all for home-based businesses. I think that it keeps your overhead low. You don't have to worry about a whole lot of, expenses, and then you get to write off a lot of stuff right there in your home. So I think that's amazing. I actually went to, I had some alterations done, and I'm looking for this alteration shop, and this gentleman house was the alteration shop. I mean, literally. I mean, I walk in there. He had the sitting room area and the mirror and the where you go and change and everything. And I was like, I'm in his living room.
Yes.
But he transformed it into into a tailor shop. So I don't know where he sleeps because I couldn't see that part. But when I walked in the front door, it was a tailor shop. And then I had another person, a massage lady. She turned her house into a massage parlor. Like, it is her home. Now, you can tell she's in a really nice neighborhood, but she has her massage sign out the door. And you come in and you thinking you're walking in the house, but no, she has it set up where it's a massage parlor. So I don't know how she gets into her house, how she works that out, but I mean, home-based businesses is where it's at. So
I agree.
Mm-hmm. So just want you to be aware the tax brackets are not going to change. They are still the same. So that'll be a good thing. But of course, make sure you get with a good tax professional. If you don't have one, we will be more than happy to help you. But get with a good tax professional that can help lower your taxes and get you into a lower tax bracket. The next thing is the standard deduction. Now, we talked briefly about this in a previous video about the standard deduction, where it was before and where it is now. And so I thought that was pretty interesting, in itself. But a good thing is the standard deduction is actually going to increase for 2024. So when you file your taxes in 25, it's going to be more. Oh,
yes. Because, pretty much the standard deduction is pretty much, let's say you have a W-2 job and you make a certain amount. And let's say Uncle Sam, the government says, all right, you don't have any type of write-offs. I'm going to give you a standard deduction. You just take, if you're single, you just take this amount off right here.
Right, yeah.
From your current income.
That's actually pretty cool. I mean, and that's like automatic. It doesn't matter. So, it doesn't matter. It's automatic deduction against your income. So right now, the standard deduction rate, if you are an individual filer, it is going to be $14,600, which is nice. Okay, yes. That is nice. And then that is the same amount for a person who hires their child, that they can also be able to pay their child that's under 18 tax-free, $14,600. So remember that number.
Yes.
That is the single rate for the standard deduction. But if you are married, it is $29,200. So that's wonderful. So
yes.
If you are a married couple and you make, let's say, $130,000. I just want to round it up. You like round numbers, right?
I do.
So $130,000, automatically they're going to take $29,200 off of your income, bringing you down to $100,000 pretty much. And that's where you'll be taxed. If you have a business, then you can actually start chopping that number down even more and getting it down a little lower. And then whatever that net amount or that adjusted gross income amount is, that is the amount you will be taxed on. So I think that is really, really cool that's happening. So I'm thinking, though, going forward, what's going to happen now under the new administration, that's actually going to continue to go up. So
yes, they're talking about making it permanent.
Yeah, it's going to continue to go up. So I could imagine it'll be, if it's already for like married couples almost $30,000 next year, maybe 31, 32, and just I know, isn't that amazing? Yeah, I think that's like amazing. So that goes up. That's an automatic deduction. So I think that's just awesome, especially if you're a business owner, because you get to add that in addition to,
Yes.
another deduction that you get. And the other deduction, I'm kind of skipping a little bit, but I think it just makes sense for the flow, is that QBI deduction.
Yeah, so you already got your pretty much $29,000.
Your standard
if
deduction if you're married.
The standard deduction, and then you get another 20% on top of that.
Oh, man. Savings. Yes, tax savings.
Yes.
So it is amazing. So the QBI, which stands for Qualified Business Income, you have a business, right?
Yes.
So, and it can go both ways. So let's just say, for example, you're married, right? And say that one of you actually work and one of you have a business, or maybe both of you work and one of you have a side business. However you have that set up, it still works the same. You get the standard deduction, $29,200, and then on your business, that's why you want to make some money.
Yes.
You want to make some money in your business, okay? Because you can be able to write that off, or take that 20% deduction off of that. And then, that's just, I think that's
a win-win.
That is a win-win. So
if you at 100,000, you already like 50,000 write-off.
Yeah. And you tell people, so, because this is something that I found interesting is you can be able, the main thing is you just want to make some income in your business.
Yes.
Don't have a business and it's just dormant and you're making no money.
Yeah, if you have a business, like 3 to 5 years, you're not making any income, that's not considered a business.
No.
That's considered a hobby.
Yeah.
So you have to be making some income, and it should be progressing every year.
Absolutely. It should be. It'd be progressing every year for the simple fact that if you want to be able to maximize.
Yes.
So the true winner at the end of the day, from what we've learned, is the business owner, okay?
Yeah.
The W-2, sorry, not much love. You got the standard deduction, though.
Yep.
But, and then, of course, you have, child credits and things like that if you have children. But
you get all that with the business.
Yeah.
Also.
Yeah, you can. Yeah, that's true. You can, it just adds on top of it. So this is more advantageous. I agree 100%.
So you don't want to be the one that makes the money and then give all the money to Uncle Sam at the end of the year.
That's
you want
right.
to be the one to make the money and then get to invest that money or do other things with it instead of giving it away.
Yeah, I agree.
Yes.
So because at the end of the day, I think that we've come a long way. We're finding more and more people that are making really good money.
Yeah.
So it's not the case where folks are not making good money. It's about how much they're able to keep.
Yes.
After their taxes are paid, it's just like, man, and it's just like so much goes to taxes. But if you know how to offset that by having a business,
yes,
then you can actually be able to see more of your money or keep more of your money in your pocket, so you can be able to do other things, help your children, whatever it is that you want to do, or reach your goals faster, pay off debt, whatever it is that you want to do.
There's so many options out there.
Mm-hmm. I agree. So many things. So, but the qualified business, the QBI, is going to stay around. Yay! Because I think that was something that was concerning. I think there were some concerns that potentially that was going to go away. So, but now I want to let folks know that that's going to stay, and you can take advantage of that as a business owner. Make sure you do that. All right, so the next one. So we covered the tax rates, we covered the standard deduction, and we talked about that wonderful qualified business income deduction at 20%. Yep. Now, let's talk about the next one. The next one would be the increase on itemization, the Schedule A. Okay, so I don't know if you want to explain that to them. What in the world is what's a Schedule A? I don't know what that is, right?
Well, the Schedule A is pretty much you're able to itemize so many things. It's pretty much at a $10,000 cap right now. Mm-hmm. So whenever we implement the new regulation is implemented in 2025, that $10,000 cap would come off.
Right.
So let's say you make $100,000 and you make more than $100,000 and you write off you get your standard deduction and you still owe, and you apply all of your itemization or let's say charitable donations or goodwill contributions and medical, dental, and it still doesn't come above that $29,000 if you're married. You're only going to get the standard deduction of $29,000. But if you apply more things and you're able to get over that $29,000, then you can get that bigger deduction. That's
Right.
pretty much what itemization is.
Right. So, and then, so what it is, so just kind of to explain that a little bit further too. So the caps are on those additional
Yes.
items. So that $10,000 cap is on state and local. Okay,
Yeah.
that's the cap there. And then, of course, there's a cap on the charitable contribution.
Yeah.
And there's a cap on the, all the different things. But the cool thing, so we talked about, the standard deduction, but what offsets that is the itemization.
Yeah.
Okay, so you have a choice. So let's say, for example, you're married and you're automatically going to get a $29,200 standard deduction off
Yeah.
your income. But itemization is where you can actually be able to get a greater deduction, and that's where they can add up your charitable contributions. Yep. They can add up your medical expenses, which is a cap on that, your state and local, your I believe property taxes. Does that go on? That goes on there too, right?
It goes on there.
It's several items that goes on there. It all adds up, and then when you add that number up, if it's bigger.
Yeah.
Then, like, say you gave a huge charitable donation, you
Yeah.
gave $50,000, right? That's huge.
And you only right now you're only able to get 60% of that of your adjusted gross income on that $50,000.
That's right. So but you can put that on the Schedule A, then add on your taxes, your state and local, add all that stuff up. And what's going to happen is they're going to go with the greater of the two. Whatever number is greater, if it's greater than that 29.2, then that's the actual deduction that you would get. So it's very important to understand that because, when folks are being strategic, about these things, if they understand what they're doing, then, they can really be able to win when it comes tax time and make sure that they're saving more money.
Yes, because I'd rather give more to the church than to the government.
Yeah, I know.
That's just me.
I know. And and I know you're telling the truth because you've had many conversations where you're like, can I just give more money to the church?
Yes. Every church we attend, we want to give the most to the church.
Yeah, can we give more to the church? Would that help, with offsetting, taxes? So, but it's a good thing. It's a good thing to give. We absolutely believe in giving because we understand that giving is essentially, I just believe it's so much reward in giving. And it's not just about, it's
not just about the write-off.
No, it's not about the write-off. No, not at all. I mean, but it's one that you're able to help people further missions, further, your community, help out with outreaches and different things, but then it doesn't hurt, that you are able to, use that as a deduction. Some people feel different ways about it, I know, but I'm not going to get into that, not today.
Yeah, I mean, I use me personally whenever we're giving so much to the church and then we have the Thanksgiving thing coming up where we can go and serve and you can see all the turkeys that we're giving out, over 5,000 people that we're giving turkeys to on Thanksgiving. Then you got Christmas where kids can come into the room and just pick out the 3 toys that they want for Christmas. Our giving to the church helps with stuff like that.
Right.
And then, the church we're at now, they got an Amazon store where they just come in and kids just come into the store and give things for free. Our church giving pays for that.
Right.
Yeah.
So I would say, at the end of the day, that money has to come from somewhere. So that's why at the end of the day, giving is such an important thing to do because we want to make sure that, we're giving back to our community, but then it is nice, as I said, that you are able to itemize that.
I agree.
So no worries on that because at the end of the day, if you can keep more money in your pocket, then you can give more, you can do more, you can just do so much more when you have more. So I agree with that as well. So the next will be bonus depreciation.
Now this one is my favorite.
Like
this one is my favorite. Now, right now, the bonus depreciation started at 100. Pretty much meaning that you can 100% meaning that you can depreciate equipment or a vehicle. I like to use the vehicle. Let's say you bought a $100,000 vehicle and you owe $200,000 in taxes. You would get a $100,000 credit from your vehicle that you can just write off in 1 year if that vehicle weighs over 6,000 pounds.
Right.
Now, right now, that bonus depreciation has been going down 20% every year. So right now we're at 60% for 2024.
Right.
Now, when 2025 happens, 2024 taxes is going to be pretty much, is it what's the word I'm looking for? Is it goes away.
Right.
It expires. That's the word.
Expires, that's the word.
And now we're going to be hopefully going back to the 100% again. So that $100,000 that your vehicle that you're buying, you're able to write off $100,000.
Right.
And then you only owe $100,000 if you owe that $200,000 to the taxes.
Right. That's right. So it is going to be 60%. For 24.
Yes.
So it has decreased from that 100%. Every year it went down.
Yeah.
It was 100% and it went down to 80%.
Yeah.
Now it's at 60%. But I am hearing that that's going to go back up to 100%. And
so if you're thinking about buying a new vehicle,
no, I ain't thinking about buying a new vehicle. I'm waiting for you to upgrade my vehicle. Now let's just keep it real. I'm waiting for you to upgrade my vehicle.
Well, let's wait to 2025.
Ooh,
Buy me some more time,
You have a justifiable reason to get a new vehicle.
I
for
would
your
get
wife.
it this year, but that's only 6%.
Okay, all right. I'll let you have that one. You can have that one. But bonus depreciation is absolutely amazing, but especially if they're going to take that back up to 100%. If they take that up to 100%, oh my gosh, we're going to be advising all of our clients strategically what to do to maximize that, especially if you have a business. We're going to utilize that.
I'm going to say one more thing. So this is saying, like, if let's say I buy $100,000 vehicle, I finance a $100,000 vehicle. That don't mean that I took the money out of my pocket and paid for it. I financed it. I made one payment, and that one payment that I made allows me to write off that whole $100,000 in 1 year.
Right.
So I can pay $1,500 and still write off $100,000.
Yeah, I mean that's awesome. A lot of times I get that question. I've had clients that have asked me. They said, "Well, should I pay cash for the vehicle, or should I get a loan? Or should I finance it?" And I'm like, absolutely finance it. Don't use up your capital. Like you can do other things with that money. That vehicle. I don't care if you have $50,000 in your savings account. Wherever you have it. I would never advise a person to take the money from their account and pay off a vehicle. Reason why is because the terms on a loan for a vehicle is usually short. 4 years, 3-4 years. You have some people extend to 5 or 7. That's their choice. But you can always pay that vehicle off fast. And it doesn't take long to do that. Even if you're just making, like an extra payment or whatever it is, you can have that thing paid off so much faster. And then opposed to you taking that money and just dumping it on the vehicle, you can do something else with that money where that money's actually making you money. You know?
Let your taxes pay for it.
Yeah. You're gonna get the depreciation anyway. You're gonna get the deduction. Oh, and then that's something else that the Trump administration wants to make it where we can be able to write off the interest. I don't know if you heard that. So the interest on new vehicles that you pay, that he wants to make that a tax deduction as well.
Okay.
Yeah. So at
this point, I'm taking all the write-offs.
I know. Give me.
I feel like we
write-off.
done paid so much in taxes that I got some money that should be coming back to me somewhere.
We definitely paid a lot of taxes when we didn't know.
Yes.
So the thing is you want to know. You want to know what you're doing at the end of the day, because if you don't know, then you can wind up paying way more money than you should. And you want to make sure that you have someone who absolutely is knowledgeable and know what they're doing, so they can make sure they're helping you save money. I think I had that conversation with a client before. They were considering, switching to go to someone else. And I said, listen, you've been with this person before, right? Because, sometimes people are loyal. Sometimes, I find that people like to just stick with something because it's familiar and they've been with it so long.
They like to go with their family, their cousin.
But they like to stick with it because they've been with it so long. But is it in your best interest? Because at the end of the day, when you have a real professional on your side, a tax professional on your side, their main objective is always to save you money in taxes. They should be looking for ways to help you, every year. And there should be some progress. You should notice a difference. It shouldn't be like, it's just the same situation. I still owe X amount every year, but there's nothing happening to, help you fix that problem.
Yes.
So we learned that the hard way. So I always, try to encourage people, you should always be progressing in that area.
Yes.
So, yep. So bonus depreciation, wonderful, 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 wonderful. All right, and the very last one would be, this is a beautiful one. the startup cost. Okay.
Yeah.
So the startup cost deduction. I want to really take some time to explain this because I think that this needs to be clarified. So, because I think at one point, I even misunderstood this. I thought the startup cost, meaning you started a business 2024 this year. Every business, you're going to have some initial startup costs, right?
Yeah.
And, whatever it is that you invest into your business to get the equipment, the materials, supplies, brochures, whatever it is, all that is startup costs in the beginning. And you can be able to write that off up to $5,000.
Yeah.
So, but the thing is, this is the part that I find is interesting.
Yep.
You need to get a sale right away.
Yep.
Immediately. I don't care what it is. You need to sell. Look, you need to go and
at least one sale.
One sale.
Yeah.
Because the moment you make one sale, now, everything that you spend after that sale is now business expenses.
Yeah, it's no longer in startup.
That's right. Because startup, you only can write up $5,000. So let's say, for example, you spend $10,000 in startup costs. You only can write $5,000 of that off.
Yes.
Now you can roll over the additional $5,000 into the next year.
Yeah.
But if you focus on, okay, let me just kind of stay within that $5,000 range for startup costs, and then focus on getting my first sale, and then now everything I spend after that first sale is considered, expenses, business expenses. That's the side you want to get to right away, because you can write off all of your business expenses against your business. So I don't know if you have any thoughts on that.
No, that's the way I would like it. I would like to write off, everything, because I use, for instance, we do the Airbnbs. Mm-hmm. It costs more than $5,000 to start an Airbnb,
right?
Just for the furniture.
Yeah.
So we don't have any sales. We limited at $5,000.
Right.
I'd rather write off the $40,000.
Right. I agree. So so that is it. So if you are a person that is concerned, about what's going on, we were just hoping that we can provide some information that would be, comforting to know that there are some things that you can be able to take advantage of and move forward. And just continue to move forward and thrive.
And like I always say, every episode we do, listen, learn it, apply it.
Absolutely. So thank you again for listening to another episode of Build a Better Business with the Floyd.
Let's go.
Until next time.
I will be. Yeah, I was born to be magnificent, everyday great, far above average, maverick, no magic, his faith and works, his blessings is the perks.